Hi, this is Raju here from Precise Trader. Okay, the topic we are going to talk today is taking full advantage of precise trading zones. Feel free to ask any questions. This would be a live trading session. What we discuss to make your trading accordingly. Uh, this is purely education, right? And please stick to your rules, meaning in the sense, whatever trades you are taking, please stick to your rules and also the stop loss and your daily limit. Okay, the crosses we will be covering basically are all these crosses. We have this USD, let me point, okay. We have this USD crosses, Euro crosses, Pound crosses, Yen crosses, Swiss crosses, Aussie crosses, Canadian, New Zealand and Sing crosses. So you can ask questions pertaining to any one of these crosses against each other. We can discuss as we go on, right? And also, do take note that when you ask questions, please specify the time frame, because what happens is most people or most traders, they go wrong is because they look at they do things in the one time frame and they take their trading decisions in another time frame. So when we take trades, at least if you specify the time, we can discuss that specific time accordingly. And the numbers, okay, the zones or the specific levels which we use, okay, this is called uh, PLP, right? This is mandatory because basically what we do is we get these numbers from Fibonacci, using Fibonacci numbers, Andrews pitchfork, moving average, trend channels, Gann numbers, and so on and so forth, right? So the PLP, what this means is the price level principle. Okay, basically what it does is you take trades because we have invented a system whereby the price is expected to turn on a specific price level. So rather than you take your trades on market orders, if you take trades on a specific price level, then your risk would be at control, meaning in the sense, you would know that, chances are, you have a risk reward ratio and it will work very nicely, and most of the time your emotions will be under control. So this is a system which we are proposing. I mean, of course, do just you can try it out, and if you feel if it works, then you can stick to that system, right? Okay, the trading tips which I'm going to talk about today is, okay, I usually give a trading tips because this is where we can learn from our mistakes and we can make ourselves a better trader. So the trading tip which I'm going to talk is today is, when the market is moving sideways, it is best to stay away, because what happens, I'm from experience, I've been in the business for almost like 15 years, right? Whenever the market is moving sideways, like for example, like euro has been trading for the past 3 weeks, it is trading in a limited range, right? It has been choppy and it is moving, a few hours it's moving up, then it's coming down. It's not giving us a clear direction or clear indication of a break. In fact, today is the break. It happened, and of course, being today is Friday, we have to wait and see whether this break is a genuine break or it is going to be a false break again. And the data we are expecting from the US is retail sales. So I think it's best for you to trade after the data is announced, because usually we do not uh, uh, recommend our clients to trade during data announcement, because especially if you use a stop loss of 30-35 pips, chances are you may be stopped out whenever you take the trade during the data announcement. So now coming back to this, when the market is moving sideways, okay, stay away. What do I mean by that? Okay, we usually we use a 2-hour chart to decide on the direction of the market, because anything lower than that, in fact, even you can use the 1 hour, but I think 2 hours is better, because 1 hour sometimes it can be quite noisy. So again, this this word is contradicting, meaning in the sense, if you are a scalper, right, you can still take a trade when the market is moving sideways. Of course, if the swings are not less than 50 pips, then I would suggest it's best for you to stay sidelined. Because what happens is, when the market is moving sideways, when you take your trade on the breakout, chances are, it might be a false break and you may be stopped out and you might be giving your money to the market unnecessarily, right? So, coming back to this, okay, as it is right now, the market is pretty quiet. Okay, what we will do is we would be discussing on the market, and towards the end of the session, maybe I can give you a trading tip. Okay, let me show you that screen. Okay, in fact, the strongest cross for today, okay, since the day open, okay, as being, just give me a minute. The strongest cross is being the pound. Okay, as you can see, the pound is already like about 107 pips above the prior close, and the second strongest being the euro, which is also quite close, which is also 100 pips, and the weakest cross is being the yen. Okay, the yen cross, that means because of course the yen is trading pretty flat compared to all the other crosses. You can see that yen is the only cross that is trading flat. But again, you can trade the yen crosses, which would be a very viable trade or a trade to look at. That means the yen crosses anything like euro yen, pound yen. That might be a viable trade for you to consider. But try not to trade dollar yen because it is still, it's in the range trading. It has not given us any breakout from the zone levels. So as a result, okay, I think, it's best for you to wait for the breakout to happen. Okay, this is the thing you need to take note about the things, the crosses today. Okay, what I will do is I would just quickly run through an example for you to see because as I told you, the yen, the pound and the euro might be a viable trade to consider today. Let me show you that screen. Okay, I'm sorry. Okay, this is in fact, this is the US session update of our report. Basically, what we do is, okay, we use, like as I told you, we use a PLP, which we call a price and pick your in any this likely. Of course, you must know whether to be a buyer or seller depending on the market conditions. So let me look at this, show you this example quickly, run through this example on this pound US for you to see. Then maybe we can see how we can take trades on this particular instrument or in this particular cross. Okay, the previous close is 150.60. In fact, the pound cross is trading right now at 151.70. Okay, which is about 110 pips, which I said early on. So it is already trading above. So overall, you should know, the fact that the buyers or the bulls are in control. So the trend wise, we generally give on three different types of trends. Okay, if you notice the hourly, it says corrective up while 150.25 holds. So what does this word corrective up mean? Okay, what it means basically is, okay, the market has been moving up, but it is towards the end of that up move. That is what we mean by corrective up. Because when we say corrective up, that means, if you can still be a buyer or long, but you have to have a cautious approach. Meaning either you book your profit very fast or try not to be very optimistic on your profit target. So that's what it means, corrective up. And as far as the daily is concerned, it's sideways while 154.20 holds, which means that as long as the price doesn't break that 154.20, the market is expected to come down. And basically what you need to do is the closer the price, the entry you take to this level, that would be the best possible trade, because that becomes the least reward with the most least risk with the most reward, right? So on the weekly wise, again, it says sideways down. So in fact, the two higher time frames are pointing lower. Only the hourly is right now is up, but again, it's corrective up. Again, what I'm saying is it is expected to reverse anytime soon. Okay, now coming back to the trade or trading decisions based on our US report. So you start off the day by taking the trades by looking at this specific levels. As I told you, we use a price level principle, which is PLP. So right now it's trading at 151.70. So if you notice, Okay, you start off the day by looking at where is the last price trading and how do you take your trading decisions. So here on this particular scenario, we feel that the price right now the price is trading at 151.70, which is below the resistance zone 1. In fact, it is in between the support zone 1 and resistance zone 1. Okay, these are the two levels whereby we use to take our trading decisions for entry levels. This is the strategy which we use, and the conditions to look for or how to use and how to apply this is, see, like as I told you, it's early on, it's corrective up. That means the market is moving, is going to move higher, but again, you need to be cautious or you have to be nimble, in your taking trading decisions. So right now, I would want to take a trade decision based on this. What I apply is, I would like to buy on the break or long on the break. That means, when it breaks 151.85, okay, I would like to go long with a stop loss of about 35 to 40 pips lower, right? And the condition I need to fulfill, that means when I go for a long, that means when I go for a buy on this, when break of this level, the condition I need to look at is to look at, about 6, in fact, it's about 2 GMT, right? You look back on the chart and see what is the registered low on the 2 GMT. And as long as the low is above 15115 or even 15090, these are the two levels we use as a benchmark, as a guideline. So in other words, if this condition is met, that means if the low after 2 GMT, right, is higher than this two levels, and when the price breaks this level, then I would like to go for a long. And when I'm long at this level, okay, the profit target which I plan to book my profit is if you see this, I have a 12120, which is in the daytime. These are the resistance levels which we pay attention to book our profits. The next level is 15255, and the next higher level is the zone 5 or the U-turn zone 5, which is 15305. So in other words, when I'm long at once the break of 15185, I would look to book my profit. If I'm a conservative trader, then I would look to book my profit at 15250, right? Which is use plus minus 5 pips, because I think, as I told you early on, basically you need to use a variance of plus minus 5 pips with our report levels, because different brokerage firm will charge a different spread. So this is where we plan to book our profit. This is my game plan A, or strategy 1. The second strategy is, I would look to long at near 15115 or even 15090, right? So if I see at any time around this level, then I would like to long at this level 150 below 15110 level, right? And I would book my profit about 50 pips, because what happens is, once the price moves into that in between this support zone 1 and resistance zone area, we call it a no man's zone area, right? So what happens is, the price becomes very choppy, and the price might find it very difficult to clear this barrier. So this is the two game plan which I have for this particular instrument, and this is what I would be looking at. Now I would wait for the price to move in any one of these two levels, then I would take my trading decisions accordingly, right? And basically this is how you use our report, and it's all like as I told you, we use this price level principle. That means we take trades on specific price levels, and we put in the stop loss, entry, exit, and stop loss, all the three orders at one go, and we wait for the market to respond to the move, right? So this is what we do. Okay, coming back to this, okay, let me give you the trading tip on this particular instrument. Okay, pound US. Okay, this order type. Okay, this is going to be a stop buy, right? Because as I told you, I would only want to buy when the price breaks. In fact, use 151.90 because as I told you, use plus minus 5 pips. So we would be long once the break of 151.85. So maybe 5 pips higher, right? So 151.90, and we put a stop loss of about 40 pips, right? And our exit level would be 152.50 on this particular trade. This would be my trade setup A, right? The next trade setup which I'm planning to do is, as I told you, I'm looking to limit buy, okay, when about 15110 level. And again, I use a stop loss. This one I can use a 30-35 pip stop loss, and my profit target would be 151.60, which I use a 50 pips profit target. So these two trades, I would like to consider this as it is, and also do take note that coming to weekend, because this is end of the week, so being Friday, you have to be a bit cautious because sometimes the market can reverse pretty fast, especially when it's coming towards the end of the week. Another trade setup which I would like to consider is Euro, right? Euro USD. What we would want to do is Euro USD is trading at 137.75. We would want to be a stop buy, right? Once it breaks 137.95. Okay, let's say we put it as 138, and the stop loss we put about 40 pips, and the profit target we are looking at this is about 138.50, 55 level. So let's say we put about 50 pips, right? So this again, this is it gives you a risk reward of 1:1. Sometimes you must understand the fact that you have to trade the market, because what happens is, because you should know that the market is already moved 100 pips higher, right? So, and we have the daily limit for the market to move about. So as a result, we are coming towards the end of that move. So we have to be pretty careful when we want to book our profits, especially when the market is already moved by that much, right? The next trade I would like to consider is Euro again. Look to buy. I'm looking to buy near 137.15. Okay, this is a limit buy. 137.15, and this one I would want to use about 35 pips, and again I use about 50 pips profit target, which is about 137.65. So overall, these are the two trade setups which I would like to consider, right? So, and in fact, the second trades, both on the second trade, the pound USD and the euro USD, would be a much more comfortable trade, because you should know that the other two trades, because early on I told you the price is corrective up. So as a result, the price may or may not reach this level. So sometimes if you make about 30 pips, then what I would suggest is try to book your profit within 30 pips, because you should know that the market is already moved about 100 pips, right? So these are the two trades. In fact, two instruments I'm giving you. If that one happens, you can take that trade, or if it comes lower, then we can take that trade. So these are the two viable trades which I'm looking for this instrument at this junction. Okay. If you want, you can ask. Maybe I'll show you the chart. If you have any questions, on any of the crosses, feel free to ask. We will be very glad to discuss on the questions which you want to ask. Because just give me a minute. I'll show you the chart. Okay. So this is pound USD. Okay, I showed you the earlier chart. Give me a minute. Yeah. So this is the pound USD, right? So what has happened is, if you notice, okay, this is a 2-hour chart, and as I told you, okay, this is a 2-hour chart, and as I told you, right? So what has happened is, this market is trying to test the previous high. In fact, the previous high, which is about 151.9752 level, right? So once it clears, in fact, what we believe is, it can go up slightly higher than that level, then make a turn down again, right? So here again, if you look at your RSI, is already like overbought. So as a result, early on you saw this corrective up. This is what we meant by corrective up, meaning in the sense the market has already risen by quite some time, right? So once it moves, the top or the upper side is going to be limited. So as a result, you have to be very cautious when you take trades towards this trade, because you should know that it is going to reverse soon. And again, especially coming to end of the week, you have to be extra careful. Okay, this is the thing. And for the Euro USD, if you notice, in fact, like as I told you, this is the first time it breached that the previous all the choppy sessions which it happened. It broke this the first time. Again, it started to move, and you see a long candle here. So what we feel is, the price might move slightly higher, but it may be, the upside may be limited, right? So try to be very careful on this, because this is towards the end of that cycle which we are seeing. So as a result, and of course, this instrument, it's got a tendency to reach at least 138 30 or even 138.65 before any significant turn down. So as a result, so you know that this market is trying to approaching this turning point. So you have to be a bit cautious, because especially when you are a buyer. Okay. Okay. Now, now let me look at the questions. Okay. Phil, again, if you feel you want to discuss about any market, feel free to ask the specific time frame as well as the market which you are interested. We can discuss and we can have a group discussion. Okay, the first question is, where do you get this chart? As I told you, okay, this, I think I presume you're looking at this numbers, because this numbers, how do we get this numbers is, as I told you, we are using Fibonacci numbers, GAN numbers, trend channels, Andrews pitchfork, and moving averages. And for those of you who are in technical analysis, you should accept the fact that most of the tools, okay, let's say you are a believer in moving average, okay, this moving average would work most of the time, but it doesn't mean that it should work always. There are sometimes, what happens is, the moving average, those group, the group which is following the moving average might cause the market to move or reverse. So sometimes, when you use the trend channel or Fibonacci numbers, the group that is following the Fibonacci numbers may cause the market to reverse or move up. So this is how, the technical analysis works. So when you compress all these tools together, built in one, then you should know that, this as a result, the numbers can be reliable most of the time. Okay, the next question is, are you scalpers? Okay, basically, the report which we use, it can be used for different types of traders. That means it is used for scalpers. It is used by day traders, short-term traders, and even long-term traders. It all depends what type of trend directions you follow, and you take your trading decisions accordingly. So this is valid for all different types of traders, right? So that's the thing. So the next question is, do you also use MACD divergence to find the precise zones to enter the market? Okay. To answer your questions on the MACD divergence, Okay, I'm quite well versed in technical analysis, and I've been using, because like as I told you, I've been in the business for almost like 15 years, right? And I've used and tested most of the tools. Okay, so you can use a MACD to find a specific turning point of the price. You must understand the fact that the most indicators or most oscillators you use, what happens is these tools are a lagging tool, meaning in the sense they have to follow the price, then they compute the value and show you on your for your analysis. So basically, what do I mean by a lagging tool? Okay, for example, maybe I do not know whether if you are following MACD, right? If you're following MACD, you should understand. Let's say you're looking at a 1 hour chart or 2 hour chart MACD. What happens is you have to wait for this 2 hour chart to close or complete. Then only it pins down that value for the MACD value. Okay, that means it will keep on moving up and down until whenever the price moves up and down. So as a result, you are one candle or one candle or one bar behind when you do your analysis. But of course, that tool can be very useful to see, especially when you use divergence, right? Divergence, overbought, oversold. It can be a very useful tool to do your analysis. But again, you must understand, or you should accept the fact that it has got its own limitations, right? So that is the thing I need to tell you about oscillators. The next question is why you choose 2 hour chart. Okay, in fact, I've been doing this for many years, right? And previously, in fact, 1 hour chart, I feel sometimes the signals can be quite noisy. So it is all up to your convenience, because some people they use 15-minute chart, 30 minutes, 60, 90, or even 120, 240. In fact, they use 6 hour chart, so on and so forth. So it all depends on what time frame you're following and what type of trader you are. So it depends. So you can use the time accordingly and take your trading decisions. The next question is that number chart available for the public? And if yes, where could you lay our hands on? Okay, basically, our website is, okay, I'll give you our website address. Okay, oops, sorry. Our website address is Precise Trader. Okay, the website address is precisetrader.com. We do publish this report on right now. We are providing the service for almost like 9, in fact 12 altogether. We have 4 reports of three instruments in one report. Altogether we have about 12 instruments including spot gold. So that is the thing. You can get a free trial, and of course we do publish the second section of the report, which with FX Street. So that is where you tend to see all these words. That means that you can only see the words on the FX Street. So if you want to have the numbers, then you have to come to our website to get a trial version. Okay, the next question is the MetaTrader 4 trading platform doesn't have 2 hours. Would it better on 1 hour or 4 hour chart? See, again, to tell you, see, because there isn't, you see, as far as trading is concerned, you should accept the fact that there isn't any fixed rule or a fixed game plan for everyone to follow, right? So it all depends at your convenience. That means, whichever time frame which you are comfortable with, especially if you are a scalper or intraday trader, it means all you need is about 35 to 50 pips. Then 1 hour is more than sufficient. 1 hour followed by a 5-minute or even a 1 minute and 5-minute chart should be more than sufficient. But when you look at 4 hour chart, of course, you have to wait for the trend, because basically you use a different time frame to find the trend directions. Okay, basically that's what you need to have a higher time frame. But as far as your entry is concerned, Okay, your entry level or your entry decision is to be considered. I think 1 minute and 5 minute chart should be more than sufficient. So this is, I do not know what kind of strategy you apply or what kind of game plan you apply, but I think 1 minute and 5 minutes should be more than sufficient to take your trading decision. This basically the higher time frame you use it to identify the trend directions and to take your trading decisions. But I mean, your entry levels, your trading decisions for the trend to identify the trend. But as far as this entry is concerned, I think 1 minute and 5 minutes should be more than sufficient. Okay, where am I based? Okay, I'm based in Singapore, right? And we have been in the business for many years, right? And myself, I'm a trader, right? And 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 that's it. You know, if you need anything from us, then feel free to write to us. We will be very glad to answer your queries. Okay, upon the next question is, upon entry using the lower time frame, would you monitor using the higher time frame? Okay, see, basically, all I can tell you is, okay, maybe I can show you one example, because you see, technical analysis, you need to be quite well versed in your technical analysis, and you should be quite clear in your assumption or analysis made. Okay, maybe what I will do is I'll show you the chart. Okay, here, coming back to the chart. See here, to show you on this chart. Okay, let's say this, I'm looking at a 2-hour chart, right? So one example I can tell you is this hourly. See, you can see this hourly trend has been moving up. So if I'm going to plot a moving average on this, of course the price would be below the moving average and the moving average will be pointing higher. But when I go on a lower time frame, see what happens is when I show you on a lower time frame, right? See, since the higher time frame is telling you a trend direction which is pointing higher. So when you go onto a lower time frame, what you should see is the price should make a higher peak and higher valley. What do I mean? You know, see, this is the valley here. You know, that means this is where the short term low, we call it a short term low or short term valley, right? So right now the peak is, you know, that higher. So as a result, when this pullback comes in, okay, this pullback should not exceed this low, which is for definite. That means, you know, you should not see the price making lower than this low. So as a result, you should be looking to a buying opportunity when this valley is formed and start to rise. That means, you know, you should know that, okay, since I'm in with the trend, that means you should remember the fact that the higher time frame, I am looking at a higher highs. So as a result, you know, this price should make higher highs and higher lows. So this is a simple example and simple strategy which you need to understand and apply it. So that's why I'm saying you need to look at a lower time frame to get your trading decisions or entry level. The next question is, can you please explain how to trade precise trading zones during strong news? Yesterday I had problems with crazy backlash trading Euro USD. Excuse me. Okay, as far as this the news is concerned, okay, like as I told you, I've given you the levels for you to consider. So I think it doesn't matter whether the news is easy, because like as I told you, you know, I'm a purely a technical based trader. So, and I apply the theory, price level principle theory, right? So even the news can be good or bad, that levels should be a turning point or entry level. So as a result, what we can do is, that means like, but you know, to understand more, you have to test it out, because you know, like if you are a scalper, because it all depends what is your risk reward ratio is. Because normally if you put your stop loss beyond 50 pips, let's say between 50 to 70 pips, then you can still trade with the news using our levels, because you know, seldom the difference is beyond 50 to 70 pips. That means from stage one zone to another zone, right? So maybe as we go on, then I will explain to you more on this. But I think you can still trade. But if you're a scalper, then I would suggest it's best for you to not to trade whenever there is news is out. Okay. Okay. The next question is, how do you differentiate between a fake breakout and a confirmed breakout? Okay. To give you an example, coming back to this, how to see a fake breakout and a valid breakout. Okay, just I can show you this example. Okay, what happens is, okay, let me draw a horizontal line on this previous high, right? So whenever you are trading on breakout, okay, one thing you must understand is, see, to confirm, to say that whether it's a valid or a valid breakout or fake. See, when the price breaks that level, right? Gets this level, and that level of support. This particular scenario, you see, purely it says that, once it breaks, crack and test, that level became a support. So on this is the old selves who have been very good Smith, when it comes back and test, and in fact this is where I'm to end below this, the policy has been valid. As a result, I can carry on with the breakout. So this is one way which I do consider and which I use in my trading analysis to use a valid breakout or a false breakout. So first time when you take on this trade, what happens is, if it really breaks below and comes below, then it is a false breakout. So that is the example which I can explain to you and show you. Okay, the next, okay, what I'm saying is the monitoring of the trade. Okay, does it mean that I shall continue to monitor the trade on the higher time frame but exit using the lower time frame? Yeah, basically what I'm trying to tell you is, okay, your entry and your exit has to be on a lower time frame. But where to enter, where to exit, that one maybe you can use a higher time frame to come to that conclusion. So that's where, like we have the report. So you use these numbers, so you know that, okay, this numbers is already been, that the homework has already done for you. So it is much more easier for you to use the levels, so you can take your trading decisions accordingly. So if you ask me, like, if you want to know any specific market, any crosses, you can ask me. I can tell you what should be looking forward to. That means, break this level, I'm going to buy this level. Break this level, I'm going to be a seller. I can tell you straight away, because this is where we come in, right? So I hope I've answered you that question as well. Any other questions you feel, or any other markets you want to discuss, which I'll be very glad to assist, because like as I told you, I'm quite well versed in technical analysis, and you name it, I can show you, and I can discuss and show you, and we can learn as a group. The question is, could you possibly repeat the euro dollar buy sell points? Okay, maybe I can show you the screen again. See, these are the two for the euro. These are the two levels. Of course, I repeat, in the top order, which is, we are buying at the breakout. You should understand the fact, like as I told you, this is coming towards, in order for you to be a better trader or successful trader, what I would suggest is, you should know the three levels. That means your entry level, your exit level, and your stop loss level. So when you know the three levels, the tricky part is, the first part is, when I'm taking a long, let's say I go for a buy, I should also know that whether my profit target should be fulfilled, or it may or may not hit. See, that is a tricky part, and that itself, it needs a lot of talent. That means, like I can tell you, like for example, I'm expecting the euro to see 128. That means before really a big turn happens. But again, you must understand that when it's going to happen, sometimes what happens is the pullback may happen first. That means it can go higher first, then later on it can come down. So that is a tricky part, and that is the thing you need to understand well. So coming back to your question, what I feel is, see, when you know that the higher time frame is approaching a barrier or resistance, then as a result, you should know that the lower time frame, you see, because how the technical analysis works is the lower time frame turns first, but the higher time frame controls the trend, right? So as a result, you should know that the lower time frame is always, they are the first one to give you the signals, and they are the first one to turn down or up first before the higher time frame turns. But once the higher time frame takes into control, that means once the bigger wave takes into control, the smaller waves will form within the bigger wave, right? So as a result, this is how it works, and you should understand understand this concept well in order for you to be a better analyst or better projection. You want to do your projection. Okay, this chart levels, like as I told you, this is mandatory. Like for example, okay, maybe I can show you one example, because you see it is far more complex than you can think, right? Okay, let's say I show you this example. See, if I'm going to draw a trend channel, okay, let's assume I draw a trend channel, right? See, what has happened is, can you see here? Okay, what has happened is, if I draw a trend channel, this is based on a 5-minute chart. Of course, if I do a higher time frame, then it gives me a different analysis, right? So here, if you notice, right now the price is is pulling back. Okay, I'll show you. I don't know whether I have pointer. Let me see here. Are you able to see my pointer? Okay. Yeah. Okay, here, okay, if you notice, right now, the market is pulling back, and the market is testing the channel, right? So of course, if it holds, once it breaks, it goes higher, okay? And if you notice, I told you the signal earlier on, said I'm long at 138, which is somewhere here, break the high. And I'm planning to exit at 138.50. So can you see here on the top side of this channel, the high is about 138.55. So I want to exit before 5 pips. As I told you, I use a 5 pips plus minus 5 variance. So that's why I gave you, I want to exit at 138.50. So this is one example. And if you notice, once you identify the channel, the price would move and respect the channel in a very nice way. So this of course you need a lot of skill in identifying the channel and drawing a trend channel. So this is one of the tools which we use. So this is the thing. So as I told you, this numbers has been derived by using this tool. So when you use this tool, I mean when you use this set of numbers, it's like you're doing indirectly. That means you're working backwards. That means you have already done the work and you're just following the signals. So that's what you're trying to do or achieve, right? Okay, the next question is, what are you thinking the Euro USD is long when in a daily time frame follow seeing a downtrend? Then I'm not understand the entry point in 137.15. Okay, see, basically what, as I told you today, the euro has moved about 100 pips higher. Okay, and you must understand that, okay, I'm giving you the signals, and if you recall, I'm not giving you a signal, I'm only giving you a signal based on about 50 pips price target, right? So I'm not telling you that, euro is going to go 142 or 143 level, I'm not committing myself with a higher time frame. So it's a very lower time frame which we use, which is quite accurate most of the time. Like if I'm going to ask you, what is your plan for the next day, or the next 1-2 days? Of course, you would be very straight away. You can tell me, okay, tomorrow I'm planning to do this, I'm planning to do that, so on and so forth. But if I'm going to ask you, what you'll be doing next year, same day, same time, then you may not know what you're doing or what would be your plan. So the same thing goes, when you do with technical analysis. If you do a projection on a lower time frame, okay, you do a projection analysis on a lower time frame, things are much more clearer and much more easy to identify. But if I'm going to do a projection in the long run, that means if I'm going to use a weekly chart or monthly chart to do a projection on a longer time frame, Of course, my accuracy may or may not be that right. So this is the thing you need to understand, and this is the thing you need to appreciate on technical analysis. Okay, the next question is, what time frame do you base your trading list on? See, basically, I'm a day trader, right? I'm never a short-term trader or long-term trader. All I'm looking to do is I use my report. Basically, I take my trade and I make, like every trade usually between 50 to 80 pips move. That is the a move which I'm looking, and that's the move I'm planning to catch every day. And we track about almost like about 36, 37 crosses. So as a result, I would be every day I would be getting some signals from any one of the crosses. Like today, I told you the crosses to look forward or the crosses to pay attention to are the pound and the euro. That is right now. So this is the thing. So maybe the next 2-3 hours, maybe another cross might take its turn. So as a result, whenever the breakout happens, then you should be taking your trading decisions accordingly, right? Okay, the next 1.3715 seems to be a 75% retracement of last move up Fibonacci. Okay, it doesn't matter. Like as I told you, right? Whatever tool which you believe in, or which you have been taking your trading decisions all these years or down the road, you can still apply and see whether this level works. Because as I told you, we use Fibonacci numbers, Andrews pitchfork, moving average, trend channels, Gann numbers. So as a result, any 2 or 3 should coincide with this set of numbers and should be giving you the right signal. Okay. Okay, I think we had a wonderful session, right? I think it was quite interesting because like the questions you were asking was quite informative, because I think most of you are technical based traders. Feel free. I mean, if you feel that we have done a good job, then we are looking forward to see you again, because we have twice a week with FX Street, right? We have one on Tuesday, which is in the I think it's 3 GMT, right? 3 GMT, and again next week Friday we have about 12 GMT, right? So feel free, if you want to write to us. Okay, our address is Precise Trader. You can write to us, info@precisetrader.com or support@precisetrader.com. Anything if you feel, and we also have an in-house webinar every Wednesday and Thursday. It's also free. Feel free to come in. Okay, and once again, I wish to thank you, and I would also take this opportunity to thank FX Street for organizing this event. I think it was a wonderful session because there was a lot of discussion which we were discussing. And if you feel, you can also bring in your friends. If you feel we have done a good job, then feel free to bring in your friends. At least we can have the bigger the group, I think, the more informative we can be, and the more we ask from questions and things we can learn as a group, right? Okay, and anyway, nice to see you. I think you are being our neighbors, right? So I'm looking forward to see you again, and feel free to write to us. And in fact, the time now here is about 9 p.m., right? It will be 9 p.m. Okay, and thank you and goodbye, and looking forward to see you. Bye.